I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. It is May 17th. It's Tuesday, and this is the interest rate update with the Mortgage Brothers. And remember, everyone, this is for informational purposes only.
Remember, we're smart, but not that smart.
Not financial advice. Okay, everybody, let's go right into the 30-year fixed mortgage. We see at 4.99 today, a little bit up, a little bit higher than yesterday. The 15-year fix, 4.25.
The 5-year ARM at 4.49. The 30-year FHA, 4.5. And the VA 30-year at 4.5.
And these are the loan assumptions for conventional, FHA, and VA loans down here. All right, everybody. So a lot of people were asking, are we in a recession? Do home prices go down during a recession? Are we in a recession? I think the answer is that, again, it's always a lagging indicator. The indicators that show when a recession happens. So a recession is technically when the 2 quarters of gross domestic product are down, the GDP, have negative growth. We probably hit that in the first quarter. Well, the numbers were negative. We'll probably show that at the end of June. We are probably in a recession right now. We probably won't know that until midsummer. But recessions are not something that are out of the ordinary.
Yeah, recessions are, even though we call them the R word, it's not the worst thing ever. Markets have to go through that. I'm trying to think of an analogy, but it's impossible for a human. It's impossible for things to just, chug along, status quo for very long. It just doesn't happen. Yeah. So it's just part of the market. That's all it is. Now, we're in that market. What do we do? What advice are we giving our borrowers? So that's what we're doing here. And this is a really interesting chart that just because recessions hit doesn't mean home prices recede.
That's right. In the last 45 years, what you'll see is that there have been 6 recessions, and only 1 out of the 6 recessions did home prices actually decline.
Because every recession's different.
Yeah.
They're not all the same. Oh, here comes the standard blue recession. No, they're all different.
Yeah, recessions, the typical recessions are, caused by either wars, economics, outside of housing.
Right.
They weren't housing related. But in 2008, that was the big recession caused by bad mortgages.
And it was the housing market that caused the recession.
Yep.
So the actual, properties that we're talking about, that was the cause of the recession. This is something different. So what are we advising? Anyway, you were going to go on. There was another point here on the chart I think you were going to mention after 2008.
Well, in 2008 was the only year. But we just see that home prices through all the other recessions, and these recessions are indicated in these gray columns. I think that's what I was going to say.
Yeah.
Everyone's probably wondering, what recessions on this chart? It's the gray columns right here. You can see the latest one was during COVID. It was a really brief recession.
Holy cow, that was.
And
can't even see it hardly.
Yeah, but look what home prices did right after.
Yeah.
So people were like, well, recession's coming. Home prices are going to be diving. Aren't they just going to fall?
Yeah.
Isn't that what home prices do?
So what do we say at the beginning? We're not financial advisors. We're not that smart. We're very good at doing loans, but we are not financial advisors. But I will tell you, I think the supply chain issue and when the lagging, COVID effects are where we are. Look at that. If someone were to call me up and say, listen, we're going to have a pandemic in the next, 2 months. Where do you think home pricing is going to go? I would have bet, a lot of money that they were going to go down.
Yeah.
What do? They did the exact opposite.
Yeah.
So we're almost in an opposite market. So be careful not to think that you have everything figured out. People need to buy. People need to live. You're either paying your landlord's mortgage or you're paying your mortgage. People they need to do that.
Yeah, that's right. And so that kind of goes to our next slide here. That's just more. The differences between 2008 and today, the setups for these recessions, because it was 2008 that set up for the recession. Back then, it was very different. There were over 2 million vacant homes for sale right before the 2008 recession, way up here. Today, we're just, we're less than half. We're like 40% of that number.
Wow.
So, because everybody knows that. Everybody knows that it's hard to find a house. And yeah, there may be a little bit more homes coming on the market, but there's a lot less.
So what that also means is that if you are one of the lucky people to actually win an offer, you're going to be in a home, and chances are that home is going to be fine value-wise. Yeah. Because until we see data that points otherwise, you're gonna you're gonna be better off having and owning trusses, sticks, bricks, dirt, lawns, trees, than anything else.
Absolutely. And here's this last slide here is in 2008, right before the recession, this shows the vacancies of rental properties. All right. So because rental properties, everyone today is one. Okay, let's just look at this. And there were 10% vacancies. That means out of 100 homes, 10 of those homes, or if out of 100 rental properties, 10 of them were not occupied by a tenant. Today, it's only about 6%, 5.8% vacancies today.
Yeah, that's huge. And again, it's impossible to have too many charts, but the lack of permits and the lack of building that we did since the recession back in 2008. Our inventory, again, it's just a totally different landscape out there.
So rental properties it's hard to find a rental property. Rental prices are high as a result.
And I'd also say too, right now and in the last 6 months, there weren't a lot of investors buying. Pricing was already high enough to where investors were like, nah, we're out. It was a lot of primary home buyers that had to go in and actually pay cash. So again, we don't think that there's this huge glut of, investment properties that are going to be hitting the market just like they did back in 2008. Again, I think it's easy for people to say.
Yeah.
What's the easy thing to say? Correction.
Yeah.
That's easy.
I think you basically were saying that the only way we're going to have lower prices if a lot of homes start coming on the market for sale. And we don't see that really happening because all those people who own homes have interest rates that are like 3%.
Yeah.
Why am I going to trade in my 3% interest rate
and
for a higher rate today?
And they have a ton of equity in their homes.
Right.
Tons of equity in their homes because they haven't actually sold, bought the boat, bought the new car, bought all this stuff, and moved in this bigger home. No, they just kind of hunkered down. So,
all right. So just to make sure everybody understands, if you have questions, be sure to comment, be sure to like the video, thumbs up on it. But again, let us know what your thoughts are. We are very interested to know. I know that it's a scary time, especially when we say recession. We want you to make sure you don't make a rash decision regarding the home and whether you purchase or not.
And the biggest reason, again, you have to pay. You have to live somewhere. Unless you're living rent free somewhere, which if you are, awesome, great. But if you have to pay rent, you're either paying your landlord's mortgage or you're going to pay your mortgage. So think about it that way. Life is complicated as it is. Don't make it any more complicated. Don't overthink this. You have to live.
All right. That's right. All right, everyone. Take care.
All right. Thanks, folks.
Hey guys, thanks for listening to the Mortgage Brothers podcast. Please let us know if you have any questions you'd like us to answer. You can email your questions to team@azmortgagebrothers.com and be sure to ask us for a free quote on your next mortgage. We'll be sure to give you personalized service and help you through the whole process. Signature Home Loans LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.